Hello, everybody. Thank you so much for joining today's video. Okay, I'm sorry again. It has been a while. Hold on, let me turn this off. Okay, yeah. I'm sorry, guys. It's been actually a while. But then, lah, CNY lah. I'm actually celebrating CNY. So for those that are celebrating and are watching my video, okay, right now, I would like to sincerely wish you a very happy Chinese New Year. Okay, if you're watching after Chinese New Year finish already, then I'm wishing you a very, very advanced Chinese New Year for 2026. Okay, so today, finally, we'll be going into episode 3. Okay, I'm gonna keep this very short and simple. I know I said this for the past two videos, okay, but then they were still half an hour long. Okay, still, in my opinion, is quite short. All right, but this one I will make it even shorter. Okay, we will go straight to the point. All right. So for today's episode, basically episode 3, we will be learning a very, very famous, but also not that famous. Why I say not the famous and why I say famous is because if you're in trading, you will know this concept. So that's why it's famous and popular because it's powerful. All right, it makes sense. It's genuinely, basically showing us, genuinely, basically. I don't think those two words go together, lah. But you know what I mean, huh? Okay, they are showing us potentially where these powerful market makers are in the market. All right. My strategy, I always mention in my live session, is what, guys? We follow the market makers. Okay, basically, we follow the trend. When we say we follow the trend, we must understand who can make the trend. Market makers make that trend. Correct? So when market makers make that trend, we follow. Okay, very simple. All right. So without further ado, guys, just a small intro. Hello, my name is Guna. I have been trading for over 3 years right now. My goal and ambition and dream, okay, ever since I got into trading and found success in trading, is to create a community of powerful, genuine traders and put them all in a single room so that everybody can learn and grow and become stronger and stronger and stronger. Okay, the reason why is because during my time lah, okay, 3 years back, okay, not fast forward, uh, is there a word fast backward? Reverse, all right, okay, 3 years ago, I was not in the correct environment, okay, and not to say correct environment, I didn't have people that had the same mindset or same belief in trading. To be honest, everybody was opposed to what I was doing, okay, everybody said scam, everybody said it's very difficult, everybody said you need a lot of capital in order to be successful, all of those things. So I kind of like realized the moment when I'm able to meet actual traders, quite a few years the second year only I managed to meet real traders, and then I realized how fast, literally how fast my progress just increased to success, like even more and more and more. I personally found success in trading after a year and 7 months. Okay, then on the second year onwards, I actually managed to meet real traders because of my success in trading. So they reached out, and then I realized how powerful it is just being able to learn from one person, then to two people, and then a group of people. I realized how beneficial that is, and I realized this is what something I didn't have before, the environment of traders. Right? So then, when I found success, I believe that everybody deserves to actually learn trading, especially it's for free, lah. Okay, because we all get in from the markets, right? Why not, right? Yeah. So then I wanted to create a community, okay, of, like I said, genuine traders where everybody can be in the same environment, so that you guys can become better and better and better each and every day, twice or even thrice as fast as it took me. And the best part, because we are all traders inside of the group, you don't have to get lost, or you guys don't have to fall as frequent as I did lah. Okay, I'm not saying you won't fall at all. Without falling, we won't learn to stand up stronger. All right, but what I'm saying is, if you fall, you won't be alone getting up. Okay, we will be there to help you get up. If you fall out of your path, okay, we will help you to get back on your path. Okay, we will keep your focus straight to your goal, which is becoming the best trader that you can be. Okay, if that sounds interesting, guys, the link is in the description to join our Discord community 100% for free. All right, You guys can join in, okay? Go through the announcement group. There is certain TNCs where all traders have to abide by. Okay, this is because we want to create a community of people that are genuinely interested in trading, genuinely here and really focused to become traders. Okay, that's what we want. Okay, we're not looking for anybody just to join in and then just don't stay active, just join in for fun. Okay, this is not what we want. We want to create genuine trading community. All right, guys. If you guys really are interested into trading, please feel free to click the link in the description where it says Discord, and you will be automatically joined into that group. Okay, I said this already. I'll say it again. Without further ado, let's get to it today. All right. So today we are going to be discussing what is a fair value gap. Okay. Okay, let me write it out, guys. Okay. Fair value gap. All right. So there is another term for it. Okay, they call it IMB. Basically, IMB means imbalance. Okay, fair value gap and imbalance are the same thing. Okay, just different terms, same thing. All right, just like how running and sprinting, it means same thing. Okay, one is running means fast, sprinting means fast, same thing. All right, there's no difference. Fair value gap and imbalance, regardless whatever you want to call it, it's the same thing. Okay, so what is a fair value gap, Guna? What is the imbalance, Guna? Don't worry. Like how I usually prepare, I already prepare my notes. Okay, wait, let me see. You guys seeing the screen, right? Okay, you guys seeing the screen. Okay, I already prepare my notes. Okay, I will just copy and paste it. Okay, see. What is a fair value gap? Let me delete the first one. Okay, fair value gap. At the location where a strong move occurs, there is a historical record of supply, demand, imbalances, see? Imbalances, or excess supply or demand. Don't worry, I will break it down. I will always summarize it to make it as easy as possible for you guys to understand. All right, don't worry. All right, so let me get the next one. Okay, I will go into what SMC actually focuses on about these fair value gaps. Okay, imbalances. Let me make this. Hold on, guys. Make it easier for you guys to see. That's funny. Oh, okay, there we go. Smart money concept. If you guys don't know, smart money concept basically means SMC. Okay. If you guys are wondering, oh, what is SMC? This is SMC, smart money concept. Okay, just a short form. The idea is to follow the trend, the trading. Okay, follow the trading. Basically, follow the trend. All footprints of major institutions and large capital to develop a trading plan. So you see, it says trading plan. It doesn't say the moment you see this thing, all right, if you understand how the market will move, you will just trade based on that. No, okay? This is just something for us, a powerful tool for us to understand where the major institutions with large capital are resting. I will repeat that. This is a tool, okay, basically just to help us understand where the major institutions and large capital are resting. Okay, because even we see these fair value gaps, okay, it doesn't necessarily mean it will eventually move the market in the direction where we see a strong move, either to the upside or the downside. It doesn't mean that. Okay, it doesn't always happen like that. It is just for us to understand something is going on in this section. We should be paying attention right now. Okay, we can use this as a trading plan, part of our trading plan, but only when it comes into our POI. What the POI means? Our point of interest, basically our area that we are waiting for price to come into, and then we want to see how price reacts. That reaction is basically related to fair value gap. Okay, just one of it, not necessarily only fair value gap, but it is a reaction. Fair value gap means there's a reaction. All right. So now, see now, very easy, right? Almost finished already. That's simple. Okay, now, so you see, hold on, maybe I shouldn't remove that. Okay, this is the notes. Okay, I'm not sure if you guys are writing it down or not. You guys should by right. Okay, if you guys are writing it down, I'll just put it here first Okay, because I want to explain to you guys. Okay, all right. So you see this. Okay, so Guna, what is a fair value gap? How do I find it? This is a fair value gap. Okay, listen to me carefully. Ready? This red candle, I will label it as 1. All right. This is 1. Oh, this is so difficult to put it in. Okay, hold on, guys. Let me just. Okay, why is this happening? Okay, this is 1. All right. This green candle, I will label it as 2. Okay. Oh, okay. That's behind. Okay, 2. And the next red candle here, I will label it as 3. It doesn't have to be red. Okay. The colors are not important. Okay. Not the colors are not important. I'm just saying red, green, red, so that you guys will understand which candles am I referring to. All right. So, yeah. This is 1, this is 2, this is 3. In order for us to identify a fair value gap, okay, we need 3 candles. Okay, the colors does not matter. All right, it's this all can be green, it will still count. Okay, what a fair value gap basically is, right, is the middle point, not really middle, but the gap lah. Okay, whereby a candle did not close properly. The reason why is because you see this big movement all the way up. Can you guys see it? Okay. With the wicks, see the wicks is all the way up to here. Okay. See, the wicks is down here. Okay. Okay. This is not a healthy movement because it's such a huge candle. Okay, and it's very fast. It moves up. Do you know how powerful is this candle? This is a H4 candle, guys. H4 candle means every 4 hours one candle will close. We all know this. Okay, I explained this multiple times already inside of our live sessions. Okay, if you guys really want to up your trading game, right, and really become better and better and better, I will highly recommend that you guys subscribe to my YouTube channel, because I will be doing live sessions almost daily whereby I share all of these free knowledges for you guys just to build you to become the trader that you always were meant to be. Okay, and another thing what you can do is to join in our Discord community group, okay, to really put yourself in the environment of traders where you will eventually learn and learn and learn and not excel, but how to say, speed up your trading progress to become such an amazing trader. Trust me, environment is so important. All right. So to identify fair value gap, basically you need 3 candles. All right. So you see 1, see 2, and see 3. So how do we identify the gap? All right. So you guys look at this. Like I said, I will repeat it again because it's very important. We need 3 candles. See 1, 2, 3. Okay. We have to look at each of these candle 1, candle 2, and candle 3. Okay, the wicks. All right. Okay, but candle 2 is not the one we should be focusing on. Okay, let me highlight that. Always, right, to find a fair value gap, candle 2, okay, is not the one we should be looking at. We should be looking at number 1 and number 3. I will explain. All right. So for this move, right, this is a bullish fair value gap. Why we say bullish is because it's a green candle. Green candle means going up. Red candle means going down. If it's a down one like this, you see, this is a bearish fair value gap. Okay. Don't worry. After I explain this, then you will realize how to find it for this one. Okay. Don't worry. I promise you guys will know. So what do we do? Okay. First, we start with number 1. Remember, number 2, we don't really care. Okay. It is important to be there because we need 3 candles. But for us to identify a fair value gap, we only focus on candle 1 and candle 3. All right. So candle 1, we start here. Okay. Can you see the wick of the candle? All right. So you see the on top part. Why we take the on top part of the candle here? Okay. Basically, it's because this is the one. This is a bullish candle. It's going up. Correct. All right. So we mark the highest part of the candle. If the wicks are there, we take the wicks one. This one don't have wick. You see, it's just a body. The wick is towards the bottom. Can you see it? So see here, I draw a line, straight line at the top of the candle. All right, number 1. Number 2, you see, not that number 2. What I'm saying is step 2. All right, sorry, step 2, not number 2. Number 2, we don't really care much. Okay, for now. Step 2, we go to candle number 3. Okay, you see the wicks. All right, we take the lower wick. Okay, the one that is closest to candle 1. See this? All right, I draw one here, and I pull one here. Okay, I gotta go lower because I need to be literally at the tip of the wick. One moment, guys. Done. Okay, you see, this candle and this candle, okay, there is an empty space in between. Okay, this is what we call a fair value gap. Okay, you might ask, Guna, I'm very confused. What do you mean by empty space? Check this out. See this candle here? See this wick, right? The last wick. Okay, look, if I pull it, see, a candle covers it. Can you see? A candle hits it. All right. See what happens if I go here? A candle covers it. All right. What happens if I go here? Nothing. Why nothing? Why no candle covers it? Yes, you might ask, but Guna, there's a big candle body here. Okay? Fair. A big candle body is here. But what we are looking for is this, guys, you see. We always skip the middle candle. This is candle 1, this is candle 2, this is candle 3. You see the wicks of the candle or the body, they must align. All right? See this one, candle 1, candle 2, candle 3. We skip this one. So this wick, you see, must align with the next candle. Can you see it aligning? Can you see it's aligning? But unfortunately, this candle, candle 1, candle 2, candle 3, you see, the wick doesn't align with anything. You see candle 3, the wick doesn't align with anything. So this is why in the middle section here, this is considered a fair value gap. Alright, this wick, unless this wick, right, is this long, up to here. Oh, sorry guys. Okay, let me draw that again. This wick is this long, or this wick, we can say this wick, because then it'll be too long. This wick is this long. Alright, I make it thinner to match the rest of the candles. Alright, unless, imagine this wick of the candle is this long, then this is not a fair value gap. The reason why is because this candle wick and this one, they align. You see, they make a line, they meet with each other. But unfortunately, in this case, they cannot meet each other. You see, there's a gap from here to reach to here. There is a gap. All right, they cannot align like this. You see, this one to reach to this one, you see, they can align with the bridge. This one to reach with this one, because we always keep the middle, remember, they can align with the bridge. This one to meet with this one, you see, they can align. All right, actually there's a very tiny wick here, they can align. All right, but this one really cannot, look, because there's a huge move in the middle. Okay, whenever big institution, these market makers, okay, make huge deals, okay, or they put a lot of funding inside of the, how to say, inside of the this market at this point of time, it will create a big move either to the upside or the downside, depending on which direction they want to push the market to. Okay, so in this case, since they placed a lot of buy orders, so the market flew up. All right, literally flew up all the way. Okay, when that happened, guys, okay, it will create a fair value gap. So now you guys might be asking, okay, might be wondering also, to be honest. All right, Guna, so what's so significant about this? Okay, I get it that we understand that this area is empty. Basically, there is no price that closed inside of this area, resulting in a gap in the market. Okay, so what is that? Why is that helpful? It's to understand the concept. When there is a gap in the market doesn't like it. Okay, the market likes this. See, everything can align. Okay, they like things to be aligned. They don't like things to not be aligned, like this one. You see, this one also same. You see this one here. Okay, this candle wick. See a big move down. This is a bearish fair value gap. Can this candle align with this candle? Cannot, because you see the distance. Look. So from this one, there is a fair value gap here. Okay, if now you're wondering, like, but inside here got candle, Guna. Exactly. If this is what you ask me, this is exactly what you should ask. Because you see, when a fair value gap is created, the market doesn't like it. I said this already. The market eventually will close up that gap. So you see this, this is a move up. All right. See, the next candles. See, the market will go inside. Can you see? It will close up the gap. It will fill it up. So now, okay, if you see this candle, it can align. It can align. There's no longer a gap anymore. Correct or not? If you see this candle, it can align. That align with this one. So now this gap is filled. The candles can now align. They can make a bridge. So whenever there's a fair value gap, it's not 100%, all right? Eventually it will fill up, but not right away, okay? We cannot have this mindset. That's why I say you cannot just trade based on this. There's many other things that you have to apply in, all right? Go watch episode 1, episode 2 that I already posted, okay? And then you can add in episode 3 into that trading strategy, all right? This will give you guys a very powerful trading strategy. Just like this, you guys can trade already, okay? So this one, fair value gap, you must just understand how is it created. Let me recap. At the location where a strong move occurs, there is a historical record of supply-demand imbalances or excess supply or demand. All right. So smart money concept, the idea is to follow the trading or footprints of major institutions and large capital to develop a trading plan. All right. So now you guys can understand this one. You see the candle move down. Okay, let me put it in replay. One moment, it's loading. All right, see the candle move down. This candle cannot align with this candle because of the gap in the middle. This is the gap. All right. So what will happen? The market will eventually go and close that gap. See, the market closed the gap. So now does this candle have something to align with? Yes, it does. How about this candle? Does this candle have something to align with? Yes, it does. Right? So this is the thing. Market will eventually do this because market doesn't like it. And once you already fill the gap, then potentially it will follow the fair value gap. Potentially, like this case, yes, it went down. Okay, nice. So this case, okay, did it go up? Okay, see, it didn't really go up. All right. See, it go down. Can you see? That's why I say you cannot just trade based on this fair value gap showing up. Okay, that means eventually when they fill up already, it will go up. No, 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 no. Okay, that's not the case, guys. But there is a way how to utilize this. Sometimes, right, if you utilize correctly, yes, whenever you see these fair value gaps, either bearish or bullish, it will go up or it will go down. Yes, I cannot say will. Very high percentages, it will go up or down. My trading strategy, okay, personal one, involves this a lot. Okay, personally now. If you guys want to learn that, okay, and you guys can just join in the Discord community group. You can see all of that trading results, all of the positive feedback. Those are from actually students, not really from me. Okay, I don't always post my results there because I want to support my students. I want them to showcase their success and their hard work and all. Okay, all of that is inside of our community. All right, this community, which you guys can just join and then go and see for yourself. I also give out live predictions there before the market and also after the market on how it moves. Everything is recorded there with timestamp, guys. Okay, that's it. We're done. Fair value gap. Okay, very straightforward, very simple. Fair value gap. Okay, recap. Basically, a strong move up that is caused by market makers due to some sort of business agreement, or they just put in a lot of funding inside, or they sell off a lot of their orders from here, which caused the market to move down or up. Okay, we always only focus on candle 1 and candle 3. All right, candle 2 is important because we need 3 candles, but we don't really focus on candle 2. We need to see if the candles can align. If they cannot align with each other, this is the gap. Okay, and that gap will eventually be closed by the market. Eventually will be filled by the market. Because why? The market only likes this kind of movements. You see, up down, up down, up down, up down. They like this. They don't like this kind of moves. Okay, the market really don't like this. Okay, you guys can see. Let me show you another one. See this move here? Okay, can this align? Cannot, nothing here. Can this align? Cannot, nothing here. So this is the gap. These two cannot align because they're far away. All right. So this is a gap. You see, market will eventually close it off because market doesn't like it. Okay, how about this one? This is also a fair value gap. You can see this one. It's nothing to close it off. This is also same. This is a gap. See, market close it off. This is also a fair value gap. See what happened? Market close it off. You can see now, okay? Trading is repetitive, guys. Okay, it really repeats itself. We just have to be able to identify when will it repeat itself and what can we do. Okay, how can we integrate this into our trading plan? Okay, how can we understand what market is telling us? All of these things, guys, we teach it. Okay, we provide to you guys. I basically have like within 10 steps you can trade like me. Okay, you can become professional trader, just 10 steps. Okay, you don't have to be so confused and then be like, oh, there's so many knowledge on this YouTube and everything. Okay, guys, I teach you guys for free. Okay, but I genuinely only want to teach people that really want it. Okay, that you are seriously interested in trading. If that is you, genuinely, if really that is you, okay, then you have to act like it. Subscribe to the channel, give this video a like, join the Discord community, and we'll speak further there. All right. I hope this video was insightful for you guys and helpful, that finally you guys now can understand the concept of fair value gap and how powerful they are. All right. So until next time, I'll be posting on episode 4, which will be coming out soon, guys. Okay. Till next time. Take care. Happy trading. And thank you. Goodbye.